check out our new merch store at www.ShotOfFactsPodcast.com, where you can find our merch with shirts dedicated to each episode you love. Check it out today and support a Shot of Facts merch. Now, going into, because you kind of mentioned about your retirement fund or your 401k or Roth or IRA.
Yeah.
And I kind of want you to explain that a little bit more to the listeners because my demographic is college students, college graduates, people who are just now beginning their careers. And even
Right.
myself, I I signed up for, we call it TSP in my job,
Okay.
where, they match how much that you put in. But I know it's a thing with your retirement fund. I'm not even really versed in it where you're supposed to max it out or you can like capitalize more of it before you retire, which is a thing that I still myself need to get more educated about. So can you explain a little bit more about just retirement funds and things of that sort as well?
Yeah. So IRA stands for individual retirement account. And then the employer sponsored accounts are the 401k. That's the one, if you have a job, you work at, Walmart, Target, wherever you work, and they have a 401k, that's the employer sponsored one that you would get, through your job. And if you're a teacher, then you would have like a 403b. So like different, like if you work for the government or if you're a teacher, you have it, it's called something different. The difference between like a 401k and an IRA is the IRA is individual. That's your personal like retirement account that you can contribute to, whereas the 401k is the one that's through your job and that your employer can match your contributions on. And so, which I'm glad you asked that question as well, because one of my tips as well with a 401k, since it is an employer matched contribution, you want to maximize that, right? So every company has their different rules. So let's say, for example, company A is giving, a 5% match of your contributions. You want to make sure that when you do your, deductions, that you are deducting up to 5% because that's the max. You want to maximize that match because let's say you only save about 3%. So that's at least 2% that your company can match you, and that's like free money into your retirement account that you're missing on, right? So you definitely want to maximize your 401k contributions if you can, because that's essentially what I say, quote unquote, free money that they're just depositing to your account as long as you just save that amount. Whereas the IRA, whether it's traditional or Roth, because traditional IRA is with pre-tax money, and you can use that money that you contribute to it. You actually get a tax deduction for IRA contributions for traditional, and then the Roth IRA is after tax dollars. So you don't get the tax benefit as far as the contributions, but since it's with after tax dollars, you actually don't pay taxes when you take it out. So you can actually have one of each, so you get the benefit of both. And then the 401k is just the employer sponsored plan. So some people have, just the 401k, and then some people have an IRA, some people have both. You just got to figure out what works for you.
Right. And it's really funny because, as young people, we don't think about retirement. It's like, I'm young and wild and free. Who cares
Yeah.
about that? But then when the time comes, you're going to wish you actually took that serious 20 plus years down the line. So that's why
Right.
I really think that it's important to foot stomp talking and discussing early about retirement plans and starting early. Start when you're young because when it's time for you to retire, you will have some serious money in the bank, like serious enough for you to
Yeah.
live however you want to live in your retirement.
Yeah,
But
and also with IRAs as well, another key point is that even though we're young, because I'm 26 and I understand like we're young. Oh yeah, retirement's like 40 years away. Like who cares
right,
about retirement? But the thing about an IRA is that you definitely still want to save in it because let's say you want to buy a house, you can actually borrow money from your IRA. Let's say if you want to use it as a down payment. You can use that as well. So just little caveats of why it is also important to not only to save with a bank account, but save with your 401k or your individual retirement account as well.
now when you borrow from there, is it like interest to pay it back or how does that go?
Well, the tax law changes sometimes. So, but like if you, I know, because I know with COVID, some of the laws have changed. So, because if I'm saying this wrong, but I know like with if you actually just borrow from your 401k, then you do pay an interest because it's weird. You're paying interest to yourself because it's your money, but you're borrowing from your 401k because you're using the money before you're 59 and a half. So you do pay interest on that. As far as if you use like your IRA to like a down payment on a house. I don't remember the exact tax law for that. If you actually pay interest on it, I don't think so. But just to make sure, because the tax law changes, they can we'll have to research that. But I know for sure if it's a 401k, yeah, if you take a loan on it, you are paying interest, but at least the money is available just in case you don't have enough in your actual like savings account.